The world of precious metals, particularly gold and silver, continues to capture the attention of investors as a haven in uncertain economic times. With recent sell-offs catalyzed by Federal Reserve Fed commentary, market movements have become a focal point for analysis. This script delves into the catalyst behind the recent sell-off, examines the broader market trends, and explores insights from renowned analyst Peter Schiff. By understanding macroeconomic factors and future outlooks, we aim to present a comprehensive picture of why gold and silver remain compelling investment options. The Federal Reserve's actions and statements are critical in shaping market sentiment, especially for precious metals. Recently, gold and silver faced sell-offs following a series of developments. A key Fed official signaled that the much-anticipated rate cuts might be delayed, according to their projections. Only one rate cut might occur in 2024. Further rate cuts may not come until 2025. This stance dampened the hopes of investors anticipating a quicker pivot, leading to a short-term pullback in gold and silver prices. The minutes of the Federal Open Market Committee FOMC echoed these sentiments, reinforcing the Fed's commitment to maintaining a tighter monetary policy for an extended period. This hawkish tone sent ripples through the market, prompting sell-offs in precious metals as investors recalibrated their expectations. Despite the recent sell-off, the broader market trends for gold and silver remain robust. Here's a closer look at their performance. Gold recently surged to a new high of $2,400 Oz, reflecting its safe haven appeal amid global economic uncertainties. Following the Fed's announcements, gold pulled back to $2,377 Oz. While this represents a short-term decline, it underscores gold's resilience in a volatile market. Silver reached an 11-year high of $32.6/Oz, showcasing its potential to outpace gold in percentage gains. After the Fed-induced sell-off, silver corrected to $30.72/Oz, but remains significantly higher than its levels earlier this year. Historically, silver tends to lag behind gold in initial rallies, but eventually outperforms, indicating strong prospects for future gains. Gold's consistent upward momentum is often seen as a precursor to silver's rally. This correlation reinforces the view that silver, with its dual role as an industrial and precious metal, has room to grow further. Renowned economic analyst Peter Schiff offers a contrarian yet compelling perspective on the recent sell-off. Schiff categorizes the sell-off as a short-term fluctuation within a long-term upward trend for precious metals. He emphasizes that investors should view these pullbacks as opportunities rather than signals of a broader market reversal. According to Schiff, both gold and silver are undervalued in the current economic environment. He places particular emphasis on silver, which he believes has stronger prospects due to its lagging performance relative to gold. Central banks globally are significant buyers of gold, but not silver. This divergence creates a unique investment opportunity for retail investors to capitalize on silver's underappreciated value. Schiff refers to silver as a coiled spring with the potential for explosive growth as demand increases. Schiff advises investors to accumulate gold and silver during pullbacks, particularly focusing on silver due to its historical volatility and growth potential. Several macroeconomic factors continue to support a bullish outlook for gold and silver. The silver market is facing a structural supply deficit for the fourth consecutive year, driven by increasing industrial demand and constrained mining output. Applications in renewable energy, electronics, and electric vehicles (EVs) are further tightening supply, creating upward pressure on prices. Central banks' monetary policies, including money supply expansion, are expected to persist, fueling inflationary pressures. Precious metals have historically been the go-to hedge against inflation, and this trend is unlikely to change in the foreseeable future. Schiff often critiques traditional economic metrics, highlighting discrepancies between official data and real-world conditions. The CPI, a commonly used measure of inflation, often understates true inflation by excluding critical elements like housing and healthcare costs. Schiff argues that these omissions distort the actual economic picture, making precious metals even more critical for preserving purchasing power. GDP growth is often touted as a sign of economic strength. However, Schiff cautions that increased government spending can inflate GDP numbers artificially without improving economic well-being. While increased productivity can offset price increases, it does not eliminate inflation. Instead, it merely mitigates its impact, leaving precious metals as a necessary safeguard. The second half of 2024 is expected to bring a turnaround in the precious metals market, driven by several key factors. Analysts anticipate that the Fed may begin cutting rates in late 2024, despite current hawkish rhetoric. Historically, Such rate cuts have been a strong catalyst for gold and silver rallies as lower interest rates reduce the opportunity cost of holding non-yielding assets. Even with potential rate cuts, inflation is likely to remain elevated, further bolstering the appeal of precious metals. Ongoing geopolitical tensions and economic uncertainties continue to drive demand for safe haven assets like gold and silver. In light of the current market dynamics, both gold and silver present compelling investment opportunities. Schiff offers the following advice to investors. While gold remains a reliable store of value, silver's dual role as an industrial and precious metal gives it an edge. Schiff recommends accumulating silver during pullbacks, given its strong potential for outsized gains. Price pullbacks in precious metals are likely to be limited and brief, given the underlying macroeconomic and supply-demand dynamics. Precious metals should form a core part of an investment portfolio as a hedge against inflation, currency devaluation, and economic instability. The recent sell-off in gold and silver, triggered by Federal Reserve commentary, represents a short-term reaction rather than a shift in the long-term trajectory of precious metals. With structural supply deficits, persistent inflation, and the likelihood of rate cuts on the horizon, gold and silver remain poised for continued growth. Investors should heed Peter Schiff's advice to capitalize on these pullbacks, particularly in silver, which offers a unique combination of undervaluation and growth potential. As history has shown, precious metals are not just an investment, but a safeguard against economic uncertainty, an essential element in any prudent financial strategy.